Today, we're talking about a problem almost no one thinks they have until it's too late, unfortunately. If you've built wealth in the $5 to $20 million range, plus there's a good chance that your biggest financial risk really isn't the market, although you might think it is, it could be your insurance. And it's not because you don't have it, likely you do, but it may be because what you think is covered isn't. So we're going to talk through 5 of the most common and expensive mistakes that we see with high net worth families. Things like liability limits, maybe they don't come close to matching your net worth, umbrella policies that look good on paper but may fall apart in real scenarios. Today, I'm joined by Alistair Lynch of Farm Bureau. Al, thanks for joining us.
Thanks for having me, Brandon.
So tell me a little bit about yourself and the Lynch agency.
We've been at this for over a decade now, and I think why we're meeting today is probably our passion for the detail.
Mm-hmm.
I guess some people call us about price, I'm told, but we actually care about coverage too. So my dad is a high net worth guy, and sometimes your parents are your first clients when you're starting off a business, and he had the state minimum liability limits for all of his coverages, and it just surprised me that a high intelligence person like my dad and a lot of other guys I've worked with since then could be ignorant to how insurance really works. So it's kind of my passion is not poking holes in other people's setup, but just making sure people are all set.
Yeah, I mean, what we've seen the last decade, too, is an explosion of wealth here in America. And so we'll ask people questions about insurance. I mean, obviously, we don't sell insurance. We rely on Al and people like Al to help our clients with that. But we'll ask them some questions, and what we've come to realize is that their liability limits are way too low. Walk me through what you're seeing, especially with the last decade of wealth explosion.
Yeah, when you think about a liability limit, I think about lawsuits, and when I'm paying out a lawsuit, the higher my limits of coverage, the higher the payout. So I think a business model of some carriers is we'll set the liability limits as low as we can, and then we won't pay as much out when our clients get sued. Some carriers turn over 50% of their clients a year. We look at turning over maybe 5-6%. So retention's a big thing for us. So we focus on coverage because that's the right thing to do anyways. Yeah. But when you look at liability limits, there's all sorts of detail. There's a budget number for the value of a human life and a fatality in a car accident.
What is that today?
$1.5 million.
Okay, it used to be 1.2, I think,
it's
5 years ago.
Yeah, it's gone up.
Okay, so we're getting more expensive as humans.
Yeah, and so I say the quick math. I used to say they probably won't take your home. They probably won't take your qualified retirement planning, and they probably won't take other liquid assets like boats, campers, toys, things like that. But I've since had some relationships I've formed with some attorneys who have worked inside the insurance industry and on the outside. And I think the quotable from one of my friends here in Grand Rapids was, they can do anything they want, Lynch.
Yeah.
And so at that point, I'm adding it all up. So that's my number.
It's interesting, like when we talk about it in our world, liability and coverage, oftentimes I'll say, what's your umbrella policy look like? And sometimes they'll say, what is an umbrella policy? Which makes me very nervous. It's not covering you from rain, right? Walk me through just how relatively inexpensive, but how valuable the umbrella policy is when we talk about limits and liabilities.
Yeah, I think if you research and do your homework, when you think about an umbrella, the main focus of an umbrella is strictly lawsuits. We're not covering a car that gets smashed up or a house that maybe blows away in the wind. And so for us, it's our firepower for the big cases. We actually like our limits low on home and auto because there's certain things that a home policy might cover that an umbrella might not, and vice versa. And so, for example, libel and slander, there's a Facebook lawsuit where a girl got bullied, and all the people that liked the post were named in a lawsuit because it was a suicide that evolved from that lawsuit. And a home policy won't cover libel and slander, but an umbrella will. So we start with the highest limits we need to have on a home policy, and then the umbrella takes the heavy lifting for there.
So the translation would be, you think you have coverage until you don't.
Yeah. I thought is usually where I'm like, that's where you went wrong, right?
Yeah.
So,
Yeah.
um,
And it's really amazing too how, especially for someone that has net worth of $5 or $10 million, how inexpensive it is. It blows my mind that you would even think to not have for a cup of coffee a week something that covers you for $3 to $5 million, right, or more.
yeah, I'd say if you have your typical empty nester type of thing where it's you and a couple of cars and a house, maybe a seasonal home,
Mm-hmm.
a couple $100 a year per million,
Mm-hmm.
which isn't a lot of money for $1 million when Feiger or Sammy Bernstein knock on the door, right?
Yeah. I mean, we'll see too, like, and we've worked with attorneys that will take on these cases, but they'll say, generally speaking, not always, right? I mean, generally what we see is they'll look at an umbrella and they'll say, okay, well, if there is an umbrella policy, maybe they just take that and because it's easy money really for the insurance companies, but it protects you from them going after other things, maybe like income, which we'll talk about in a little bit, or other items. But another thing we see too is you can have an umbrella policy, right? So now we talk about people who are doing good things, but maybe not the best thing. So let's look at like assets mismatching, titling. So you may have, a personal policy, but you may have assets owned in like a family trust or an LLC, and the mismatch of coverage isn't applicable there. Talk me through what you see there and how you advise clients in that arena.
It's probably my favorite part of how we start the insurance journey is our number one rule is you can't insure what you don't own.
Mm-hmm.
So if you have an ownership interest in something and it's not labeled properly, a lot of times attorneys will direct a certain agenda where they want things set up a certain way, and we'll look at it and say, maybe we want it set up a different way. But a lot of collaboratively held properties, like a summer home,
Mm-hmm.
where maybe there's 4 or 5 groups of multiple generations that are ownership with a
We see that a
trust.
lot, yeah.
Yeah. So there's structure that we have to do there. The biggest thing, it's a lot like trust management, where if you forget to tell me what you own, I can't put it inside the box of protection, right?
Yeah.
So I'll see guys that have 40-foot boats that aren't listed on their home insurance, which inadvertently don't get listed on umbrellas and things like that.
If it's not listed, it isn't covered sometimes.
Correct.
Yeah, I think sometimes people think they're being clever by not telling myself or you about assets, but we don't really care what you own. We're trying to protect what you own. So it's probably best to, like, for instance, a doctor. It's probably best to tell your doctor if you have a pre-existing condition as opposed to them trying to figure it out on their own. You'll probably get better coverage, better advice, better service if you just tell them what you have.
Yeah.
Yeah.
And that's where it's not common for me to work with clients that I don't meet in person. And a lot of times my favorite setting for the first appointment is at their home.
Mm-hmm.
And it seems kind of old fashioned, like I'm going to walk up with some old leather briefcase, and a fedora on. But the reality is I pull up and go, oh, you didn't tell me you had a camper, and what about the pool house, and what's this, right? And so that's the fun part for us, is to go down that journey, because things just pop up. Conversation. If you're not having conversations with who you're doing business with, they're going to miss things.
Yeah, and I always say, too, I'd rather ask a question 3 times and hear the same answer 3 times than I don't ask it and miss something. What's the harm in being told the same thing 3 times? But I think the bigger risk is we miss something by not asking the question a few different ways.
And I get it. The insurance costs money, right? But there's this thought when clients will come see me, prospective clients, that we start to talk about some of these additional things they should have, and they're thinking they're going to spend more money. A lot of times, if you're with the right carriers, you might still save some money and set things up properly. But it's this thought of holding back information that surprises me with folks sometimes.
It's funny because we'll see here in West Michigan, especially, people will step over $1 to pick up a dime. I'm like, what are we doing here? I mean, sure, you can save money on something, but if you're going to save money and it's not going to do what you need to do in the time of crisis, what's the point of paying for it? You might as well pay 0 at that point.
Yeah, we always say you're only as good as your weakest link.
Right.
And that's where I think we don't get tapped on the shoulder enough.
Yeah.
I see a lot in the space you're in where, in the coined term might be wealth management, but the reality is it's strictly managing money.
Yeah.
On the growth side, and the risk side on the back end, it's never thought of till it's too late.
Yeah. Another thing that we're seeing now is, as criminals become more wise, a lot of the criminals are targeting cyber and identity risk, right? So high net worth equals a high value target, and they know that, right? So what we'll see is like wire fraud, email compromise, identity theft, social engineering scams, and they're getting pretty good. Walk me through kind of how you look at coverage for those items and how you advise people there, because that can really wipe out wealth quickly. Once you wire, it's gone.
Yeah, I hate to say it, but my mother went through this a couple months ago. My dad just recently passed, and I think somehow, like you talk about the technology, that maybe an obituary put her name on a list to maybe get a hold of her somehow. But I used to always say, get a LifeLock, do some of the things that the big banks do. But the reality was the big bank didn't help her in this setting where she walked into a bank and wired money. Our company had a base coverage of $25,000, which was what she wired off, ironically. So I was worried I was going to get investigated. but the reality is she was restored through that channel. But it's so rampant now that I don't know. It's moving so fast, it's hard to keep ahead of it. You can increase standalone cyber liability policies, but most of your decent carriers are offering some base coverage, but not enough if you're talking about hundreds of thousands.
Well, and I think that goes into your point earlier of it's not a one size fits all, right? Cheapest isn't always best. I think you really need a set of eyes and hands on the situation to ask deeper questions. And if you go online to do that, Progressive probably isn't caring. No knock on Progressive, but if you're going with someone over the phone that they don't know you, you don't know them, I don't know where the coordination would come in there to know some of these questions that need to be asked.
It's amazing what coverages you can elect not to go with.
Because you're saving $1, right?
Most of the people, I call it heuristics patterns. If you're under the age of 35, there's a pretty good chance one of the funny TV commercial type carriers is who you're using for your auto insurance.
Yeah.
There's coverages that would protect you if you needed to sue somebody, if you got injured in a car accident that you can elect not to have. It's pretty easy just to say no to everything, right?
Yeah.
So, and that's where going back to the conversation about ownership, I've seen where teen drivers get expensive and mom and dad will say, bye, go get your own policy. Well, but dad might have forgotten that he's still titled on the vehicle. And you can't insure what you don't own, right? And even then, co-titling, now you can be brought into lawsuits. So that's the area we get really good synergy with when you start dealing with wealth management, estate planning attorneys, trust management, and really eliminating. Sometimes it might cost you a little more money to move kids to their own policies, but it helps them start their credit journey too.
Yeah.
So to me, as soon as you can do it, we want to see them on their own.
And you just hit a really good point is insurance shouldn't be siloed by itself, right? And I always say the same thing about us. Investment management shouldn't be siloed by itself because all these pieces, estate planning, retirement planning, investment management, insurance, they're all intertwined. And so if you take the siloed approach of, you can do this one thing over here, Al, but I've got this. You don't have a quarterback. You don't have a coordinated approach with these pieces to an overall financial plan. I mean, walk me through the value that you see in the coordination with professionals that you're working with and how it benefits the client overall.
Yeah, I don't want to use a cliche word like tribe, but I have some groups that I work with on a daily basis that our main focus is, hey, I've got this set. Will you make sure this is set right on the other side? And if you don't, you can do all these things right, but if you miss one pleasure boat that's out every weekend at the lake house and things like that, you're wiped. So for us, I think it adds value to the relationships too. I mean, to me, if you know you can walk in a door somewhere and not only does this gentleman have connections to estate planning and tax planning and risk management, it's not a sales pitch. It just sets you up better. And it's usually when you get into those relationships, you're not spending more money for those types of relationships. It's just, hey, have you considered this? Have you considered that?
Yeah, and I think what I've seen is the more coordinated your approach is, the less money you actually spend at the end. I think people get kind of suckered into the upfront cost of the price without thinking the long-term value, right? Because price and value sometimes are mismatched.
It's probably our biggest battle in my world. If I'm working with high net worth, is we only get approached when it comes to premium. Oh, my rates went up, but we're saying, well, what are you comparing, right? If you're not set up right, it doesn't matter. It could be $1 for all I care. I tell people to cancel it sometimes. you're better off just going without self-insure, so
Take your risk, right?
usually there's a just kidding after the fact, but
Yeah.
but the reality is these people have no idea
Yeah.
that they have no coverage for that,
Yeah.
so it's pretty wild.
So if I were to say, hey, in closing, what's maybe the biggest hurdle you're seeing over the next 5 years in the insurance world? What would that be? What would your one piece of closing advice be to someone?
I just think wealth there's a lot of wealth transfer coming. There's a lot of baby boomers. There's a lot of changes in our economy and how things are going to look here. And I think that there's a lot of people that just assume, hey, I got mom's house. I can keep it in mom's name for a year and a half till I decide that we got our trust work done. There's issues with how we handle medical suits and auto insurance these days that people have no clue. There's cases we're watching right now where somebody didn't list a 2-year-old member of their household and they're not going to cover a car accident because they lied on the application, right? So I think the cost of litigation is so high right now that there's a lot of companies looking to get out of things, whether it's a medical bill or a lawsuit. And so for me, there's no time more than now that I'd want to sit down and make sure I'm dialed in, because I just see it. We're litigation heavy right now, it seems like, in society.
Yeah, I always tell people, like, with how litigious we are, take the time, whether it's an hour or two, to make sure you're covered in the events that these things happen. I mean, I can only do so much on my end as a financial planner, but I review insurance, but I don't provide insurance, right? That's where you come in. And so I think someone is very foolish to do all the pieces and then say, the insurance is okay, without really, truly looking at it, because that's going to be your landmine protection, right? Of like, let's make sure we don't step on landmines, and this is how we're going to do it. You could think you could have everything buttoned up. I've done the estate planning, I've done whatever it may be. And a lot of people hear insurance and they get afraid a little bit, which I understand. But I think that is such a potentially grave mistake.
Yeah. And to have the interest you guys show always surprises me. Like, you'll know after review that somebody's buying a new car and we'll be in conversation and I laugh at you sometimes, but it's cool that you guys care like that. And for us, when we're in our meetings with our clients, it's a similar collaborative thought process to be able to do that back for other professionals, because we want to make sure people are all set. What's the point of taking any money in if it's not going to do its job?
I agree.
So,
Yeah. So, Al, if someone want to get a hold of you to have their financial picture reviewed on the insurance side, how would they do that?
Our website's probably easiest.
Okay.
www.lynchfbi.com.
Okay. Al, thanks for your time today. I always appreciate the conversation, the insight, the honesty, and looking out for people. Thanks so much for joining us.
Yeah, appreciate it.
It's been great to have you.
Yeah, thanks a lot.
Yeah. And as always, keep moving forward together.